preparing.
Okay.
Okay, so go. All right, hold on one sec. This is right. All right, cool. Welcome to the Money Market Show. And if you're watching this and you're the book, How to Sell Homes in the Market, just click that view there. Right. So the Money Market Show is where I interview realtors who are making in this market, but I also interview lenders, lending partners who are helping us to make a big difference in this market, especially in this market. And today with me is Mr. Jason Twyford from Orion Lending, all the way from Southern California, beautiful Southern California, right? And so I'm so excited. We want to talk about down payment assistance. And for me, this is a month for down payment assistance. So you have no money out there, or you don't want to put money down or whatever. Hey, especially in the changing market, this is a time for you to stay tuned to this program, see how you can, or whoever you know can avail themselves to the down payment assistance. This is America. It's a great place. I love the country. You know, I was in Tahoe just this week and it was great. You know, and Tahoe is just one of the places. You can go to Yosemite or you can go down south, you know, Malibu or whatever. Okay. So that's for another day. But today we're going to talk about the down payment assistance program. So welcome to the show, Jason.
Thank you very much, Paul. Glad to be here.
Oh, man. Okay, cool. Let's talk a little bit about you. So how long have you been in the mortgage industry?
I started right out of college, 1993. So I just hit my 29th anniversary in the business.
Man, you must love it.
I do. You know, some people are made for the business, some people aren't. And I think I was designed specifically to be a wholesale account executive.
Oh, my goodness. So why mortgages?
What's that?
Why mortgages? Why not Hollywood? I mean, you live very close to Hollywood.
You know what? I love the business. It has provided a wonderful life for my family. It gives me the flexibility to be a part of my kids' lives growing up, coach their teams, be at their games and practices. And you make a difference in people's lives, putting them in homes. So it's a pretty cool job.
Yeah, wonderful. So basically, it's enabled you to spend time with your family, enabled you feel glad when somebody gets the key to the home and all that stuff. And that's great. And honestly, what else can you ask for? Okay. So how long have you been on Orion?
About 5 years.
5 years. Okay, cool. That's awesome. So today we're going to talk about no money down, right?
Yes, we are.
Assistance.
Yes.
Okay, you know, the market is changing right now, right? The market's changing. I don't know what it is over there in Southern California, but you see the same thing there? Is it changing a little bit?
You know, I lend nationwide.
Okay.
And there are a few pockets that are different, but for the most part, the entire country is experiencing the same thing we are in Northern California and Southern California, where we had arguably the craziest, most polarized sellers market that I have ever seen in my career.
29 years. Yeah, exactly.
Sellers are demanding 50 to 100,000 above appraised value, no financing contingencies, no appraisal contingencies. I've never seen anything like it. And we are definitely seeing a shift from that market into much more of a state of, I would say, equilibrium in most areas. You still have some of these polarized spots where that's still the norm, but it's becoming more and more atypical. That's for sure.
A changing market is good news for buyers, because you have people have been sitting on the sidelines, properties and listings getting 50 offers on and stuff like that. I would never, ever make an offer on a property that gets too many offers. It makes no sense. But now people have been sitting on the sidelines. Is an opportunity now to buy, right?
There's a tremendous opportunity. And I think there's a mass number of buyers that sat on the sidelines, started writing offers, and realized I am one of 50 offers on this property. And eventually they gave up. I mean, I've got clients, mortgage brokers and realtors, who represented buyers that wrote in excess of 30 offers, never got one accepted. And they gave up, they signed a lease, and they accepted the fact that this wasn't the right time for them to be a homeowner.
That's crazy. Now is an opportunity for them to come out of the woodworks and say, oh, man, I'm here.
Now is the time to go back to all of those buyers that got frustrated and discouraged and gave up and bring them back into the game. Because as we've seen things shift, I'll give you an example. I was doing a training for a client that does real estate loans. They had a couple of realtors say they were out, they showed a particular buyer 4 different homes on a weekend. 6 months ago, if you showed a buyer 4 homes and wrote 4 offers and called the listing agent, they would never even take your call.
Yes.
Now you want to see how much the market has shifted. And this was in Rancho Cucamonga.
Yes.
Every one of those listing agents who 6 months ago wouldn't give you the time of day
Yes.
was now calling the buyer's agent. Hey, did they like the house? Are they going to write an offer? What can we do to get them to write an offer? So there has been a drastic shift
Yes.
in the buyer's favor. 100%.
So it's good, right? It's good, right? It's great.
Oh,
right? It's
absolutely.
great.
Absolutely.
Yeah. Right? So especially, okay, now we have interest rates are rising, okay? So there's an opportunity for buyers. So how do you circumvent, or how do you make sure that all these buyers are able to buy properties if they're faced with, I mean, prices haven't dropped that much, right? But now you have interest rates going up. How do you make sure that those buyers who's like, okay, now I have an opportunity, how can they buy if interest rates are now double what they were just a few months ago?
Well, it's a situation where you don't generally get everything. Everything would be low house price, low interest rate, and that's ideal for the buyer, not great for the seller. We hit a period where we had arguably very high values and offers being written above appraised value with really low interest rates. Great for the seller, not really great for the buyer because they're overpaying for properties. So, it's one of those situations you don't get your cake and you get to eat it too. And there's no free money. So while we've seen interest rates move up, we've seen values not necessarily drop, but at least adjust to what would be appropriate. Meaning if you've got a $500,000 house on the market, you're probably going to be able to buy it for $500,000 now, where 6 months ago you were writing offers at 530, 550. Somebody probably closed escrow to get that at 600. Yes. So while I would empathize with the buyer that says, hey, I want to see values drop, I want the market to crash, I don't think that's going to happen. We haven't been doing any of the things that we did in the early 2000s that caused a 2007 type of adjustment.
Yes.
I think what we're going to see is a slight correction. But the bottom line is if you wait to try to time it perfectly, you're going to miss it. Guaranteed 100% of the time. Exactly.
And that's why you come in. That's why I couldn't wait to interview you today, because we'll talk about the rates are high today, but they're high today because the government is trying to basically tame inflation. So the rates are not going to remain that high forever. So maybe 18 months down the road, these same buyers can refinance. Or they're buying properties, for example, I have a buyer who's in contract for 630, but I look at the comps, they're acting about 700. Oh my goodness. So that's a great opportunity for her to buy, even though the rate might be higher. Okay. But
yes. And let me point this out. We keep talking about rates being higher and rates being high. And I will say relative to where rates were 6 and 12 months ago, 24 months ago, rates have definitely increased.
Yes.
But historically speaking, rates are still fantastic.
Yes.
I mean, mortgage interest rates in the 5% range and 6% range is still historically near record lows.
Yes.
So while I think everyone gets so skewed by saying, well, rates have gone from 2.75 up to 5.5, they've doubled. Yes, they have. But historically, rates are still fantastic. And yes, I think that, not to get sidetracked on any kind of a political agenda, but if we see any kind of adjustment politically, the probability that we see another drop in rates to create opportunity to refinance your clients is absolutely going to be there. And I think we see that in the next 18 to 24 months.
Exactly.
I agree with you on that.
Great. So it's a great time for buyers to buy when sellers are like, oh my goodness, some kind of tribulations coming to them. It's like, oh my goodness, do you think I can get this value now? Because I'm scared. So it's time for the buyers to step in and say, good. And we offer all kinds of stuff. You can have sellers buy down. They can help the buyers with the credit, right? And so
absolutely. Absolutely.
Okay. Let's talk about this down payment assistance that you offer, and then you offer through us, the money market here. So what is it? What's your down payment like?
The down payment assistance program.
Yes.
So the down payment assistance program is a privately funded program, which makes it much more dynamic and robust than what you would normally see with one of the state programs, county, city type of programs, where they're really geared specifically for low-income borrowers You have a lot of restrictions with respect to income levels. They're designed exclusively for first-time buyers. I've got a program that doesn't subscribe to any of those guidelines and requirements. So I go to lower credit scores. I go down to a 600 credit score. You don't have to bring in a first-time buyer client. This could be a client that's buying up, that already owns real estate, that has investment properties. We have no income limits on this program. And we're fully delegated on this, which means we underwrite everything in-house, draw your docs and fund, which allows us to close that deal in as low as 21 days, even shorter. In fact, we just closed one that closed start to finish from the date of the contract to the date we funded was 17 days. And historically, down payment assistance is much more clunky, cumbersome program that's got to be underwritten by a lender. It's got to be subscribed to the or sent into the city, county, state, re-underwritten to make sure it complies and conforms with all of those requirements. So it really allows us to move quickly on this. We don't have the income restrictions. We don't have the debt restrictions that a lot of those programs have.
So it's not Carl Haffer and none of that.
So I didn't want to call them out by name, but yes, it is not the Cal Haffa program. Great program if you qualify, but again, very, very restrictive and much more time consuming.
Okay, cool. That's great. That's great to know that you can close them quickly and there are no restrictions and stuff like that, like you mentioned, right? So let's talk about the details. So you got 2 loans. Is that correct?
Yeah, you're going to get 2 loans. You're going to get an FHA first trust deed that's going to go to 96.5% LTV. And I've got 2 options for you on the second trust deed. I can get your client the 3.5% second, which is going to give them 100% CLTV, meaning we're going to cover the entire down payment. The alternative to that is that we would give them a 5% second. It's still a 96.5% first. A 5% second would then provide the entire down payment plus an additional 1.5% toward closing costs. So we can get your client, if they choose to go that option, and it's at their discretion entirely, additional funds that would provide money for closing costs as well.
That's amazing. I need to know more about that because some buyers might come in, like the buyer have right now, or the borrower have right now, will say, "Oh, Paul, okay, fine. You can give me 100% financing, but how about my closing costs, right?
Right.
You have some closing costs." So you're saying that this second program can actually give up to 1.5% of purchase price. Okay, 1.8, is it 1.5%? Yeah, 1.5% of the purchase price. That will take care of the closing costs. Is that correct?
It could be applied to closing costs. It's probably not going to cover all of their closing costs, but it'll certainly cover some of them. And here's the trend. Here's the trend that we're seeing right now. We've talked about the shift in the market over I would say the last 6 months.
Yes.
We're tracking inventory levels also. And we're seeing inventory levels in a lot of cities, and I'll say primarily Southern California, which is where I'm based, increasing by anywhere from 100% to 300%. Meaning if you've got a city that had 100 homes on the market 90 days ago, now we're seeing anywhere from 200 to 300 to 400 homes on the market,
Right.
which is causing these sellers to, quite frankly, the sellers are starting to panic. They feel like they missed the boat on that peak of the market. And
Yes.
what comes with this excess inventory level is the sellers are willing to start playing ball. So it's not atypical, and we're starting to see a lot of transactions on the down payment assistance in particular coming in with seller credits, where the seller is willing to give a credit of 1% to 2% towards your buyer's closing costs. So if I'm giving them 1.5%, the seller is giving them 1% to 2%.
Yes.
There is the possibility that we could literally get your client in and close escrow with no money out of pocket. Now, again, that's kind of rare. We're going to have to get all the stars to align, but 3 months down the road, that may become the norm. Literally, and there's no minimum requirement in this transaction from the borrower. So literally, if they put a $2,500 earnest money deposit into escrow and
Yes.
we get the numbers to work out correctly, they could literally get that entire $2,500 refunded to them at the close of escrow.
That's just amazing. That's just amazing. And it's static news. I think that's why I could not wait to interview today. And I can't wait for everyone to hear this on LinkedIn, on Facebook, and on YouTube and all that stuff. And blast it to all the agents. They need to know this. And if you're watching this, and you think this is good news, please comment below and share this stuff. And if you have a question, you can call me at 415-510-0127, 415-510-0127. Okay, cool. So Jason, we want to talk about some of these loans, are they forgivable or not forgivable?
So we have a couple of different options on those seconds. We've got a forgivable program and we've got a repayable program. I'll share my personal opinion because really it doesn't matter to me which program the client takes. The forgivable program is a silent second. They don't make a payment. There's no interest rate. So it's not a 0% interest. There's just not even an interest rate that's calculated.
Yes.
They don't make a payment on it. If they take the 3.5% second, it's forgiven after 36 on-time payments on the first.
Okay.
If they take the 5% second, it's forgiven after 120 payments on the first, which is 10 years. Now, the only downside to that program, it comes at a relatively high cost, which is going to start chipping into your borrower's closing costs. And again, if we're dealing with someone who truly needs the down payment assistance, not somebody who would really like it because their perception is they're getting a killer deal, they're getting some free money, but they have limited funds to close escrow when they want to buy a home. We're now stacking up costs, which is going to make it more challenging for them to be able to close escrow. Now, the solution to that is, we allow the borrower to use their own funds, any combination of gift funds from a family member, a seller credit. If you happen to be able to access any kind of a city or county grant program for closing costs, that would be eligible, but we are adding to the closing costs. Now, the repayable program, while it's not awesome like the forgivable, and they don't make, it's not a zero interest, no payment, silent second, the repayable program comes at either no cost or a very slight cost. And it's a 10-year loan. Interest rate on the second is going to be 2% above the note rate on the first. And they do begin making payments. That payment is calculated and included in their debt ratio. But if the goal is to get them in and get that escrow closed with minimal costs, the repayable second seems to be the better alternative. And I will tell you that in today's market right now, and I would tell you, 3-4 months ago when pricing was a little bit different, we did a lot more of the forgivable. But in today's market, and I'm probably closing 3 to 5 of these per a week, these down payment assistance programs. So the market has shifted. The seller resistance to accepting down payment assistance has virtually been completely eliminated. We're starting to see the seller credits, but 95% of the deals I'm closing right now all include that repayable second from a closing cost standpoint.
Okay, so I would have thought like somebody would opt, because if the closing cost, let's say, if the deal I'm doing right now, the second is $22,000, right? And if she only has to spend pay this back in 36 months, wouldn't it make sense for her to just take that one and it's okay? I pay for 36 months and I'm done, and it's forgiven,
Right.
Because I have paid closing costs, whatever the closing cost may be. I just take the seller to give my closing costs, right? Pay the closing cost if it's $10,000, which is not going to be the case, because I suppose the closing cost or the cost there is based on the second and not the first. Is that correct?
Yeah. Yes, absolutely. And here's the thing, economically, you're absolutely right. When you do the numbers, you're better off to take that forgivable second.
Yes.
But if the client doesn't have the extra $3,000 to $5,000, $8,000 to bring in to close escrow, that's what's driving the ship home right now.
Yeah.
We can say, yes, you're going to get this $22,000 for free.
Yes.
You can bring in an extra $6,000, but if they don't have the $6,000 to bring in, their priority right now seems to be closing escrow and getting in the home, especially for these buyers that, they wrote 20 offers, they got discouraged, they felt dejected, signed a lease a year ago, and now they're like, holy cow, the market's shifted enough that I'm back and I'm ready to buy.
Hey, Jason, I wrote a book. I'm a writer. You can say I'm a communicator. I'm a massive communicator. I'm a mass media person. Okay, when I was in Taiwan, I wrote a few books over there that really made a big difference. And then it took me a while to write a book in America. And the book I wrote in America was called "It's Impossible to Be Poor in America." Right? So, and I see poor people all over the place and stuff like that. Right. So I wasn't born here. Okay, and I let everybody know, and maybe my accent actually says that I wasn't born here. Okay, but I see all these things that America offers and stuff like that. Even, and I don't want to get into politics and stuff. And the other, just more than that, 46 million people killed them. 46,000 people killed themselves in 2020. And I know it's a complicated subject and stuff like that. I just came back from Tahoe, driving down to the Bay Area. And, oh my goodness, I wish I could stay in Tahoe forever.
Yes.
and I could stay in Yosemite. It's a okay. Drive down Highway 101, the Pacific Coast. Okay. Oh, good. And it takes me all the way to Malibu down there. If I can surf, I'll surf. Man, it's a great country, and it has great programs. It has great people like yourself, right? And he's like, gee, this is something to celebrate. Okay, there's something to celebrate. So that's why I just couldn't wait, man. This is good news. Some people concentrate on problems. No. Some people believe in just fighting. No, it should be about solutions. And this is a great country, provides the solutions for its citizens. Even if you don't have insurance, you walk into a Stanford University hospital and you can get served there. Nobody's gonna ask you for anything. You come here, you are an illegal immigrant, and you're getting first-class treatment as a pregnant woman in this beautiful state of California. This is just amazing stuff. And I know I'm preaching here, but I feel in my bones, I feel in my heart. And what you're providing here is great. So in some people crying, oh my goodness, interest rates are high. You always said they're only 6%, right? I'm looking at your rate sheet the other day. It's like, come on, okay, a par is 6.375. That's par. Right. For the first, okay, you getting money, you're buying a house, okay, I'm in the Bay Area where we are, you can go up to $970,000, right? That's your, for a single family residence. Duplex, right. 1.2, triplex, 1.5, fourplex, 1.8. And this program applies to those people too, right? Right.
Yeah, you can go up to 2 units on the program. 2 units. Not that you're going to have a lot of them up in your area, Paul, but you could do manufactured homes. You can do condos. Every property type that's available, we can cover you and support you and your clients achieving that dream of home ownership.
Wow, man. Okay, this is the first of many other calls that we're going to have, and I really appreciate your time this morning, man. I really appreciate. Thank your family for me. Thank you.
I will.
Okay, man. And when I go down to Southern California, I can't wait to meet you. So which city are you at?
I live in Rancho Cucamonga. My office is in the city of Orange, right there in Orange County. But I live in the Inland Empire out in Rancho Cucamonga. And yeah, that's where I've set up shop.
Now I have a new friend in Rancho Cucamonga. I can't even say
That's it. So when you're down in Rancho Cucamonga, make sure you stop by. We got a spot for you. We'll hang out.
Yes, sir.
Have a good time.
Yeah. Okay. Thank you, Jason. I appreciate it.
You got it. Thank you, Paul, for the opportunity to be here. And, God bless you and support your clients.
God bless you too, man. It's all about God. You got a mission here. You got to find your place in this world. Okay.
Yes, sir.
Thank you, sir. I appreciate it.
You got it.
All right. Bye-bye.
Bye-bye.